Hello, Facebook. This is the 39.6 Facebook Live, episode number 28. This is the show this is our show where we teach you how to make your money work for you so you don't have to work for your money. Today's episode, how to file your tax return with TurboTax, filing the Backdoor Roth properly. Take it away, Pinky.
Hey, let's get moving.
Thank you very much, Pinky. All right. This is episode number 28, the Backdoor Roth Turbotax episode. So I have, hopefully showing up on the screen properly here, I have TurboTax up, and I also have a little picture of me in the corner. I'm going to make this a little higher. Maybe I'll show up a little bit better. All right. So, okay. Maybe I'll have to take off the frame. Okay. So we're just going to basically go through TurboTax. This is the desktop version, not the online version, but it's going to be relatively similar. Okay. And I go through how to basically put in the proper information so that you're not getting taxed on your Backdoor Roth IRA, at least not on the portion you are contributing. Okay. So here we are in TurboTax. I have the 2018 home and business version here. Okay, and I have made a fake TurboTax account so that the numbers will basically work properly. Okay, so when you're using TurboTax, it's basically just a bunch of questions, but the Backdoor Roth portion can get a little bit confusing. Okay, so first thing I did in making this template is I first added two W-2s, one for Mr. 39.6 and one for Mrs. 39.6, and each of them earn $150,000. Okay, and I just do that so that the total income of $300,000 on their wages exceeds the limit for direct contributions to a Roth IRA. Okay, so to discuss more about how Backdoor Roth IRA contributions or Backdoor Roths work, please go back to see episode 22. This will really focus on just how to do the filing properly. Okay, so I first put our two W-2s in, okay? Then the next section you're going to go to, okay, so we're gonna go over here to deductions and credits, okay? And I'll just go here to, I'll choose what I work on so I can skip to the portion that I want to see, okay? So if we scroll down, okay, over here in the yellow portion with the dollar sign, we have retirements and investments, okay? And we have traditional and Roth IRA contributions. So the first step of the Backdoor Roth is putting the money in, okay? So I'm gonna go in here and I'm gonna update this portion. And I'm going to say that both Mr. and Mrs. 39.6 have a traditional IRA and also a Roth IRA, okay? So it wants to know what accounts we have in 2018. We're filing the 2018, or doing the 2018 tax return right now. And we're going to assume we made a contribution in 2018 and we did the second step, which is the Roth conversion, okay? So Mr. and Mrs. both have a traditional and a Roth IRA. Hit continue. Okay. So it just basically asks some basic questions. And one of the things that I don't like about TurboTax is if you ever go back to it, to a section, you have to go through all the questions again. But anyhow, we're going to walk through them. So did Mr. 39.6 make a contribution to a traditional IRA for 2018? Yes. Okay. Was this a repayment of money previously taken out of a retirement plan? In other words, are you returning money back to the retirement plan? No, we are not repaying, okay? And now it asks, how much did you contribute for 2018? Now remember, you actually have until April 15th to do this, okay? But we're going to assume that we did it already. So we're gonna type in 5,500, which was the maximum you could contribute to a traditional IRA for people under the age of 50 last year, Okay, how much of it was contributed between January and April of this year? None, because we did all of it last year. Okay. Now, then it says, did you change your mind? Is this what we call a recharacterization of any of the money from a traditional IRA contribution to a Roth IRA contribution? Like, did you change your mind? Okay, no, this is not a recharacterization. We're not changing the type of IRA contribution. This is a traditional IRA contribution directly. Okay, so this is not a recharacterization. Is Mr. 39.6 covered by a retirement plan at work? We're going to just say yes. Okay. Okay, now did Mr. 39.6 contribute more money to this IRA than was allowed in 2017 or any previous year? Were there any excess contributions? No. Okay, now any non-deductible contributions to Mr. 39.6's IRA. Let us know if Mr. 39.6 made and kept track of any non-deductible contributions to the traditional IRA in 2017 or previous. Okay, so we're going to just, for simplicity, assume that 2018 was the very first year that a backdoor Roth was done. Okay, and so this was the very first time any non-deductible traditional IRA contributions were made. Okay, so we're going to say no, Mr. 39.6 did not. Okay, now we do the misses. Did Mrs. 39.6 make a contribution to a traditional IRA? Yes. Okay, is it a repayment? No. So it's the same questions we just did. Okay, how much was Mrs. total 2018 traditional IRA contributions? $5,500, because she's not 50 years old and did not give any additional. Okay, how much was done after January 2019? None of it. Okay, was any of this a recharacterization? No. Okay, was there any excess contributions made in previous years? No. Okay, now, were any non-deductible contributions made in previous years? No. Okay, is this a repayment of a retirement distribution? No. Okay, how much was Mr.'s Roth IRA contribution? Now remember, their income is over 300,000, or is 300,000, which is over the limit for allowing direct Roth IRA contributions. And as such, this has to be zero, okay, because we did not make any contribution to the Roth. Okay, now, was any money that went into a Roth switched or recharacterized? No. Okay, did Mr. 39.6 open any Roth IRAs in 2017 or a previous year? For simplicity, we're going to say no. At 2018 was the very first time that any IRA contributions were made. Okay, was this a repayment? No. Okay, what is Mrs. 39.6 Roth contribution? Also zero. Okay, we're going to do the same questions. Any characterizations? Recharacterizations? No. Did you open a Roth IRA in previous years? No. Okay, so now it says the income was too high to deduct an IRA contribution. Okay, here it says Mr. 39.6's modified AGI was 300,000, and that puts him over the limit for making any IRA deductions, which we knew about. Okay, you can't have a modified AGI over $121,000 if you are covered by a retirement plan at work. So it's just letting you know that. Okay, now the same thing for Mrs. They have a joint modified AGI of 300K, which is over 121K. Okay, so this says, based on the information entered, you do not qualify for an IRA deduction, which we knew about. This would make our contribution a non-deductible IRA contribution. Okay, so your IRA deduction is zero. Okay, so the federal refund here has not changed. It was set at zero before because we assumed that we had withheld exactly the right amount of money. Okay, now hasn't changed at all, and we have now finished that portion where we indicate that we have contributed $11,000 to IRAs, $5,500 for Mr. and $5,500 for Mrs. Okay, so that part is completed. Now, the part that's confusing, and I do it in the order that is actually done in real life, where we do the contributions first, but that shows up under deductions. Okay, now you have to go back to income to do the second part, which is the Roth conversion. Okay, so now I'm going to go back to income. I'm going to scroll down. Okay, and you see here the same portion, retirement plans, Social Security. Okay, that yellow like egg with a dollar sign or whatever that symbol is. Okay, now there's an area here for IRA. Basically, when you do a Roth conversion, you're basically taking money out of an IRA. So it's basically like you're getting some income. Okay, so you're going to get what's called a 1099-R form. Okay, and that will basically tell you and tell the IRS that you took money out of an IRA. Okay, so we are going to go to this portion where it says update. Okay, so your 1099-R. Okay, we'll cover any income, rollovers, or conversions that have been reported already on a Form 1099-R, including withdrawals from an IRA, a 401k, an annuity, pensions, life insurance, or disability. Okay, so did you have any of these types of income? Yes. Okay, so then you have to specify that this 1099-R, okay, was withdrawal of money from a retirement plan, okay, or an IRA right here. So the first button, okay. We're going to do Mr. 39.6 first, okay, then we'll do Mrs. after. Okay, so who is the payer? We're going to put in Vanguard, okay, and I'm just going to put in the TIN number. Okay, I'll skip the address for now. Okay, so you have to do this exactly as it is in the boxes. Okay, so this is a very, very, very important portion to do correctly. Okay, so box 1 tells the IRS how much was converted. Okay, now it's a two-step process. You have to put your money into the IRA and then you converted it. You have to let the money settle. For some people, that takes a few days, especially if you're putting in new money. It could take a week, for example. So let's say after a week, it has gone up to $5,502, okay? That was the total amount in there that was converted, okay? The taxable amount is the same exact $5,502, okay? It also has both of these boxes marked. Taxable amount, not determined, okay? So even though it says taxable amount 5502, it's really telling them that we don't actually know how much of this has to be taxed, okay? And it was a total distribution because it was a Roth conversion of the entire balance is what you did, okay? Now, there was no federal income tax withheld, okay? And then in box 7, okay, there's a code. It should say code 2, early distribution exception applies, okay? So that's basically telling the IRS what type of distribution had been taken from the traditional IRA, okay? And then this box, IRA SEP simple, is also checked, okay? So this part has to be done correctly. So hit continue, okay? Now it says, good news, you do not owe any extra tax on this money. Okay, fantastic. Continue. Did Mr. 39.6 inherit the IRA? Nope. Okay, what did you do with the money from Vanguard? Okay, so this is key. You have to choose the first button where it says Mr. 39.6 moved the money to another retirement account or returned it to the same one, okay? Because once you choose that, you will then get 3 options here. Okay, now these 3 options say, Mr. 39.6 rolled it over, okay, to another traditional IRA or other retirement account, or what we need to mark is Mr. 39.6 converted all of the money to a Roth IRA account, okay, because you did a Roth conversion of the entire balance, okay? That's it. So we're gonna do another one for her, okay? So Form 1099-R, the same exact thing we just did, except I have to put, I'm sorry, I messed that one up. We have to put in Mrs., okay, because this is hers. Okay, so then we're gonna put the same information we had just put in, Vanguard, and I put in the TIN here, 232869268. Okay, so we're gonna do the same thing. It was $5,502. Okay, the taxable amount again, $5,502, although you have to mark taxable amount not determined, total distribution, 0 federal income tax withheld. Okay, box 2, early distribution exception applies. Okay, and hit this box. Okay, so that's it. That's the 1099-R for Mrs. 39.6. Okay, good news. You don't owe extra tax on this money. But now look, the federal tax due had gone from 0 up to $1. Okay, so that $1 came from the earnings that you had for that week while the money was sitting in the traditional IRA. I'll get to that in a second. We'll see how that mathed out. Okay, so we're going to continue. Was this inherited? Nope. Okay, what did you do with the money? We have to switch to the first button and then say Mrs. 39.6 converted all of the money to a Roth IRA account. Okay, so now you have 2 different 1099-Rs, one for him and one for her. Each of them says $5,502 for a total of $11,004. You could have multiple 1099-Rs. You could have IRAs at multiple different places. But for simplicity, we're just having one for each of them. Okay. Was there a qualified disaster distribution? Nope. Was there any hurricane distribution? Nope. Okay. No qualified disaster for her and no hurricane distribution for her. Okay. Now, any non-deductible contribution to Mr. 39.6's IRA. Okay. Let us know if Mr. 39.6 made and kept track of any non-deductible contributions in 2017 or previous. Now, for simplicity, we're saying that we're doing this in 2018 for the first time, okay? But if you had done it in previous years, you would mark yes. And what that does, it helps keep track of your history so that you know what your basis is, okay? So we're gonna say no because this will be the first time, okay? Now it asks you, what is the value of Mr.'s traditional, SEP, and simple IRAs on the last day of 2018, okay? Because the Roth conversion was done prior to that day, it's 0, okay? That's very important, okay? Ask the same questions for Mrs. 39.6, nope, okay? And there we go. All right, so now it says $11,004 here, okay? And your federal tax due is still the $1. Okay, so what we're gonna do is we're gonna look at how this actually showed up on the tax forms. So when you made those contributions to the IRA, you're gonna get a form 8606. Okay, this is the one for Mrs. and this is the one for Mr. They're both gonna say $5,500 was contributed, okay? And that's it. At the bottom, part 2, it'll say the amount that was converted, and here it'll say the $5,502. Okay, now if you look at this, we have the $5,500 contributed and the $5,502 that was converted. So you subtract these two and you get the $2, which is the taxable portion. You have to pay tax at ordinary income rates on whatever that extra amount was. Okay, and that's it. That's the same thing for Mr. and for Mrs. So each of them have a $2 taxable amount. Okay, now there's also this IRA distribution sheet, okay, for Mr. and Mrs. that shows basically the same numbers. $5,500 contributed, $5,502 that was converted, and it says what percentage of that was originally there as basis. Okay, and it comes again with the same $2 portion here. Okay, so those basically just kind of show and makes sure for you that you're only paying tax on that tiny, tiny amount of extra, not the whole $5,500. If you're paying tax on the full $5,500, then the whole point of doing a backdoor Roth is completely lost because now you're paying more money in tax, and the whole idea was to save you some money in tax. Okay, so now we'll go to Form 1040, which is the main kind of the home base of your tax return. And we're going to see right here on line 1, it says your wages were $300,000 for the two of you, okay, for Mr. and Mrs. It says that the IRA income was $11,004. That was how much was on those 1099Rs. But in line 4B, it clarifies the taxable amount was only $4. Okay, so if you look at your total income, it's the $300,000 of wages plus only that $4 of gain for a total of $300,004. Okay, so that ends up being your adjusted gross income. You then take your $24,000 standard deduction, and then you have your taxable income of $276,004. Okay, so it's very important that this number in line 4B should be a very small number, like less than $10, assuming you did this conversion pretty quickly. Okay, now you could have done the conversion quickly and then you could still have a few cents sitting in your traditional IRA. It's fine. You can just let it sit there until next year and do this again. It's such a small number. Whenever they do these calculations, it'll just round to 0. Okay, so the things you want to make sure about, okay, you want to make sure you have an 8606 filled out for the spouse, the filer and the spouse, so Mr. and Mrs. Okay, you want to make sure that on your 1040, you have a small number that says the small amount of tax you need to pay in line 4B. Okay, and then these worksheets are where the math happens. Okay, and that shows you that you should not be paying tax on this. So that's it. It's a little bit confusing in TurboTax, I'll be honest, because most people don't do a backdoor Roth. Okay, even a lot of CPAs honestly don't know how to do this properly. Okay, so it would be nice if kind of IRAs were its own separate section and you could just go through the process, but very few people in this country percentage-wise do this. Okay, so it's not really designed to make it user-friendly. So make sure you do it properly if you do it. If you can't get it to work properly, don't do it. Have somebody else do it that does it properly. Okay, because paying tax on that $11,000 contribution would be like an extra, for example, $3,000. Okay, so that's it for today. Thank you for the people who came in. Thanks, Bantu. Thanks, Ryan. Thanks, Ari, for showing up. Much appreciated. This video will be shared on my new YouTube channel. So if you go to YouTube and you search for 39.6, you should be able to find all of my videos that are stored there. They're also stored on my webpage, 39.point6.com. All right, if you subscribe to the YouTube channel, that would be fantastic, because once I get 100 subscribers, I will get a customized URL like youtube.com/39.6, and then it'll be a lot easier to find it all. So thank you very much. If you like this, give it a thumbs up. Please share it. And until next time, Pinky, take it away.
Hey, let's get moving.